This is a flip lesson for Business Studies 3 students, the nature of business. This presentation is divided into the nature of business and the types of businesses, how we distinguish businesses by. At the end of this presentation, you should understand the nature of business, the contributions businesses make, the functions of business, and the different types of businesses. The importance of business studies. Well, you guys have decided to study business studies, and it's got a whole range of benefits for you. Not only does it teach you about businesses, but also how they manage it, the insights and skills, how to be a better employer, and learn useful life skills. So it will help you to become a successful business owner, a productive employee, a more informed consumer. You can make better informed decisions and use your money more wisely. A better informed investor. You may want to invest some money in the share market or in the property market. Understanding terminology and business principles will help you. And also a better decision maker about money and finance in general will be of great benefit to you. Now let's have a look at the importance of business to the Australian economy as a whole. As you can see, there's many ways that businesses contribute to the economy. In short, business plays a crucial role and has impacts on our lives and our standard of living. First of all, level of exports to other countries, which generates more income for us, especially in a bigger global market. Assists in the development of new technology. Provides employment and income for employees. We obviously have to pay taxes like everybody else, and company tax and payroll tax as well as others. Undertake investment, which leads to economic growth, which is the cornerstone of economic growth. It provides a range of products and gives consumers better choice. So small business is always looking at finding new ways of developing delivery of products and services. That aims to improve our quality of life, and while we're doing this, we're obviously learning, we're training, we're accessing skills, we're developing skills, and it's good grounding for future business people, i.e. us, hopefully, the entrepreneurs. It creates value and, again, economic growth. Encourages competition, which aims to result in cheaper products and services. It provides income for business owners, why also unit, to make a profit and to increase wealth. Small business owners tend to be innovators, and they do tend to spend a bit of time in research development, not only in products but also in processes and services. And with any business, there are always challenges and many rewards. The nature of business. Business is an effort of individuals or group of individuals to produce a good or service to consumers at a profit that satisfies the consumer's needs and wants. So obviously market information, market research is very important here. Let's take an example where we look at a cafe/antique store. Now this figure has come out of your text, so you can follow that later or just here on the screen now. Obviously the business is in the production of something, so they're creating products, in this case reproducing furniture, and also providing some coffee to go along with it. Management, the management coordinate the limited resources to achieve their goals. For example, the owner buys a new machine that makes coffee faster and saves on labour. Organising all your resources, capital, human and natural resources. Distributing goods and services to their customers. Planning finances, production and business needs. Forecasting sales. Now this is an important part of planning in business, and we need to know whether we're going to have a shortfall in cash or going to make a profit in the future. And if we don't, we obviously need to change things. Controlling production, the quantity and quality of the coffee that's served up. And of course people got to know about our product, so we need to market. For example, we can have an online presence or use social media. Now I'd like you to pause for a second or moment to check your understanding based on what I've said, and the background reading is in your text. The questions are on page 9. The questions I'd like you to do is questions 2, 3, 4 and 8. What are the functions of business? Why are people going into business? As I mentioned earlier, the main motive is profit, to produce a good or service for consumers to buy. Profit is made up of income, the amount of money that you get from your sales, and you take away your costs, and hopefully your income will exceed the costs, so therefore you make a profit. It provides employment. Small businesses provide up to 80% of all private sector jobs. Incomes. Businesses provide incomes to business owners, shareholders and employees. They provide a choice. The consumers have a freedom of choice and opportunity to purchase products at competitive prices. Innovation. Through research and development, existing products and services and processes are improved and new products are created. Entrepreneurship. Businesses provide individuals with the opportunity to turn their ideas and passions into a livelihood, which hopefully will create wealth so they can set themselves up in the future. And all this activity leads to economic growth, and the more that we have, the more the whole community will benefit, and the quality of life and the standard of living will go up. Again, I'd like you to pause here, go to page 19 of the text. To consolidate the understanding, there's some questions down here to consolidate what I've just been talking about. Questions 2, 3, 5, 6, 7, 10 and 11. Now let's look at types of businesses. They can be classified in a number of ways: by size, location, industry sector and legal structure. Size. Well, the criteria for size will be the number of employees, the market share, the number of owners in the business and the legal structure. I'll explain those using this table here. So if we have a small business, generally a small business has less than 20 employees, owned by 1 or 2 people. The common legal structure will be a sole trade or partnership. The source of finance to go into business will generally come from owners, and the market share is small. We're talking about small niche type businesses. Medium, you've got 20 to 100 employees, a few owners, maybe up to 10. The legal structure is generally can be an extended partnership or indeed private company, and that will depend on how much income the business earns and if it's more advantageous from a taxation point of view to become a company. Owners and shareholders contribute the source of finance, the capital, and obviously for bigger or medium-sized business you've got more accessible money, and the market share tends to be in the medium area. Going on to large businesses, usually bigger than 100 employees, you've got thousands of owners. It can be a public company but sometimes also a private company, and you've got lots and lots of sources of finance from shareholders, and the share market or the market share with these type of businesses can potentially be much larger. We can also distinguish by geographic spread: a local business, a national business or global business. Those boundaries can also be a little bit blurred in that a small business with less than say 20 employees can also have a global presence because of the online sales and the ability to reach a bigger global market. Now the reason why businesses change or want to expand will be to increase their sales. If there's demand out there, they might need to increase their capital outlay. They might need to buy another store or factory floor or something like that to increase their sales. That will increase their profit. Remember, that's our main motive here, in order to get a bigger share of the market and hopefully access the global market as well. When businesses expand, more capital is normally required, and this may also lead to the ownership structure changing. Let's look at industry structures. It's based on the type of activity the business undertakes. So we've got 5 sectors here that we could look at. If we are producing from natural resources, a farm, a fishery, or something like that, it's considered to be in the primary industry. Where a production process takes place of manufactured goods, we're in the secondary industry. A bakery can be one example, car plant, engineering firm, that sort of thing. The tertiary sector, we're looking at where all services are taken account of, for example, doctor, taxi, retail, consultancy, that sort of thing. The quaternary industry, services that involve IT and education. Now, in the Australian economy, that is becoming an increasingly bigger and bigger slice of our GDP, and it forms a big part of our service sector. So examples there, IT consultants, training provider, and so on. The culinary industry, they're the services performed at home. So we're talking about tourism, bed and breakfast type place, craft industries, childcare. There's just some examples there. Again, I'd like you to pause. On page 29 and 34, there's some consolidation exercises, as you can see here. Question 3 on page 29, question 3 on page 34. Now lastly, we get to legal structure. As I said before, when businesses expand, more capital is required, and this may lead to ownership structure changing. Let's have a look at the types of legal structures that there are. There's 4 of them. We can classify them into incorporated, so that means that they are a company, and they have different benefits, but they also have other downsides and costs. And we have the more simple forms of ownership, but they're unincorporated. Again, they've got advantages and disadvantages. Let's look at those. There are 4 different types of structures for business. As I've explained to you earlier, the unincorporated ones are sole trade and partnership. Here for sole trader, you only have one owner, obviously. It's not incorporated, as I said. Unlimited liability, I'll come back into in a while. The cost of entry is fairly cheap. The profits and all the workload is shared by the owner, by the one person. Therefore, because there's only one person, expansion to expand your business is difficult, and the management is obviously by the owner, him or herself. In a partnership, you spread the load a bit, but you can have anywhere between 2 and 20 people. Again, no limited liability. The cost to entry is reasonably cheap. It's more expensive as generally a partnership agreement is set up. The profits are shared by the partners as well as the workload, and it's the managers who are the partners in this setup as well. Because you've got more people, the possibilities for expansion are therefore increased. Now we come to incorporated enterprises. Now the thing with incorporated enterprises is that the most a person can lose is the amount that they put into the business. So for example, if you start up a company and put in $100,000 as initial capital, then that's all you can lose. So your liability is limited to the amount of investment that you put in. Now this is opposed to the sole trade and partnership, right, where you can put in $100,000 either by yourself or in a partnership, and if the business unfortunately goes bankrupt and your debts that you owe after all your assets have been sold off exceed that amount, then you then have to come up with that excess from your own personal assets. So in an extreme situation, if the amounts are high, you may be forced to sell your own house or other assets in order to meet that shortfall. So that's the big downer for the sole traders and partnership. And for private and public companies, that's the big advantage. There are some downsides. The cost of entry is one, where because you have to adhere to so many regulations and laws in the Companies Act, very expensive to set up and to administer every year. In terms of the profits, if I have a 10% shareholding in a private company, I'm going to get 10% of the profits. In relation to a public company, I might hold 1,000 shares. The board of directors decide that they will allocate 10 cents per share, so I'm going to get $100. The expansions, the possibility for expansions are a lot easier, especially for a public company, because they can have a public float, as it's called, to attract a whole lot of other people from the public to take part in their new business venture or expanded business venture. The other thing that's different about companies is that you have a board of directors who are directly responsible to run the company as well as the management. And the important thing to note here is that management and the board of directors are separate, totally separate from the owners of the business. Now, that doesn't mean that directors and managers can't have shares in this company. Now, the other distinguishing feature about companies is what they have got after their name: proprietary limited, or in the case of a private company, it's Pty. Ltd. And in the public company, it's usually, for example, ANZ Limited with Ltd after it, and that distinguishes a public company from a private company. Now let's turn to some consolidating your understanding from pages 40 and 45 in your text. Now this section is really important. Please complete the questions 1, 2, 4, 6 and 8 on page 40 and questions 7 and 11 on page 45. I hope that this presentation has been useful to you. Certainly a very important part to get you going in the course, and thank you for listening.